So today we're going to be discussing exactly how to double your stimulus paycheck with these top 3 investments. Welcome back, frugal people. My name is Andrei Jikh, and hopefully by now some of you will have received your sweet $1,200 stimulus paycheck. And if you haven't got yours yet, you'll be getting it anywhere between today and the 17th of April. But wow, what a crazy time to be alive. Companies are literally running out of money, and the stock market's reaction to all this? Unemployment sky high with over 16 million Americans out of a job, and it looks like it's still gonna get worse. 31% of renters haven't paid their rent. Stock market. And finally, Bernie Sanders drops out of the presidential race, and the stock market. Yeah, nothing is making sense right now. We are so disconnected from reality that no sane person can make sense of it. Thankfully, I'm not. But I have listened to dozens and dozens of hours of billionaires, millionaires, real estate moguls all try to make sense of this, and none of it does. None of them have any kind of specificity as far as what to expect and what the deadlines are for what is gonna happen and exactly when, and they provide no actionable advice that I could follow. So I thought to myself, why not throw in my 2 unqualified cents, which aren't actually cents, which makes them unqualified. So if we are gonna do this, let's do this the right way. CNBC actually invited me to go on their show to get my thoughts on the matter. How crazy is that? OMG, I'm on CNBC.
Thanks for coming on our show. Joining us now is YouTube's Andrei Jikh, a 10-year veteran market strategy analyst with specialty in equity investments, Fibonacci sequences, and tea leaves. Thank you for joining us.
Thanks for having me on.
Do you think the stock market has hit its rock bottom? What are your thoughts?
Well, when looking at our sophisticated and comprehensive data analysis models, we can predict that the stock market has not hit rock bottom just yet. We're going to continue to test lower lows on the technical breakout.
Okay, please walk us through specifically all the scenarios that may happen.
Well, it's a smorgasbord of bubbles. Bubbles everywhere. We expect to see the largest corporate credit bubble in history. We also expect to see the largest equity market bubble from the equity markets with the stock buybacks and the pension plan crisis. The student loan bubble, the index funds bubble, the auto loan bubble, and the ETF market structure bubble. The dollar bubble, because the US dollar is pegged as the world's reserve currency, the monetary central bank bubble, and the European banking crisis.
Wow, you have all your bases covered.
Well, here at CNBC, I figured you take pride in being able to say, I told you so.
Federal Reserve.
Federal Reserve.
Federal Reserve.
Breaking news. The truth of the matter is that no one has any idea of what's about to happen. So the best thing that we can do is not panic, continue being patient, staying indoors, continue to isolate, waiting until this whole dust settles. And in the meantime, there are ways we can use our money to our advantage right now. So let me share with you some investment ideas that I've been looking at to protect myself. But before I do, let me show you exactly what my stock market portfolio is looking like right now. So far, at my all-time high, I was at $224,721. That's the highest I was ever at around February 14th. But then after the Rona took hold, the Ronies, the Llorona, my 3 Spanish viewers will appreciate that reference, my portfolio dropped all the way down to $144,000. And that's a difference of roughly $80,000 in the span of just a little over a month. I'm not a millionaire, so for me, $80,000 is a ton of money. Why do you think I've got acne? Because it's stressful, and also my skin is really oily and I need to stop touching my face. Smash the like button if you can relate for puberty. So trust me while I say it's extremely tempting for me right now not to sell off my entire portfolio while I'm still in the green and just sit it out, deposit that money in my bank account, and wait until this whole thing cools off. Normally speaking, you should be able to double your money roughly every 7 to 10 years in the market. And what makes the most sense to me right now are these top 3 investments in the stock market. Number 1, stocks that will be extra profitable during and after the recession, after the dust settles. These are companies that make products that we buy regardless of how good or bad the economy is doing. Whether it's up or down or sideways, doesn't matter. And these sectors include healthcare, utilities, and consumer staples. These are the must-haves of life, and they do not change. We'll always need to eat, we will always need medicine, and we will always need electricity and water, unless you're Smeagol. in which case you can bet a little bigger in the energy sector, which is still considered a pretty defensive sector in the time of a recession. But still, my favorite investment in the stock market is with Dividend Aristocrats. Now, I recently did a video about the top 11 stocks to buy in a recession, so definitely go check out that video, but I will summarize it here. I'm not gonna make you go watch that video, even though I think it's really good. So here are the stocks. It's Apple, AT&T, McDonald's, AbbVie, PPL Corporation or Duke Energy, Accenture, General Dynamics, Lind, O Realty, Chevron or ExxonMobil, and Pepsi. Now, I'm not saying these are the best stocks or these are stocks that you should go out and buy right now. Just do your own research, but I am saying that these different companies represent the 11 different sectors of the economy, and they have a good blend of yield, risk, safety, and growth. But remember, you don't have to own whole companies outright. You can also own bit by bit with something called fractional shares. Another investment idea is everyone's favorite, it's Vanguard's favorite, and that is index funds. But even index funds will unlikely to double your money anytime soon because of what's going on right now. In fact, we're probably gonna have slow growth or even negative growth in the next few years. But if you are nearing retirement, then substitute this whole stock market idea with bonds. Don't try to double your money. It's just not worth the risk to try to double your money in the next 7 to 10 years, which is unlikely to happen anyway. So instead, try to protect yourself from losing even more money. The second type of investment or asset class is real estate, which is something that I've never personally got into, but always wanted to. And even here, we're disconnected from reality. Every single day, people are losing their jobs and their incomes, and I'm seeing more and more houses flood the market, and they're still at all-time price highs. It doesn't make sense. Is the government really gonna protect people from being evicted or losing their house forever? And when it stops protecting people, what do you think will happen to the housing market, especially considering that 30% of people didn't make rent? Another thing that's gonna really hurt the real estate market soon is the higher end market with home prices above $500,000 because liquidity and jumbo loans have just dried up. No one is lending money on that scale right now, so that end of the market is going to suffer, and the banks that have received the money from the government are just gonna hoard it for themselves, just like I said they would. The corporations wanna protect themselves because these jumbo loans are not secured by Fannie and Freddie. And I'm seeing this play out every single day in front of my very eyes in the Las Vegas real estate market. But of course, if you can get financing and if you can find a great deal, then put a down payment of as least amount of money as possible and find yourself a great deal. But I would wait. That's exactly what I'm doing. But of course, with real estate, you're gonna double your money far quicker than you could with the stock market. So if you can find yourself some cheap money to borrow, then you are literally going to get rich by getting in debt. And you will make money thanks to the interest rate being lower on that borrowed money than the rate of inflation for the foreseeable future, thanks to these $1 trillion bailout packages. Of course, if you are gonna do that, make sure that your income is 100% secure, otherwise not worth the risk to be greedy in order to lose your house, your credit score, and your dignity. Thankfully, I do magic sometimes, so I've already lost all my dignity anyway. And my third and favorite investment of all of these is Plan B. And no, I don't mean like the pill, I mean Plan B as in Bitcoin. I just recently bought one, and ultimately, it's like my insurance plan or a hedge against total system failure. In the next 6 months to a year and a half, I think the price of one Bitcoin is easily going to double, if not triple in value. And the reason for that is because Bitcoin is kind of like a vacuum that sucks up all of these fiat paper money. And that's because all around the world, as governments introduce more and more paper money into the system to try to prop everyone up, Bitcoin is gonna suck it all up with its demand. But Bitcoin is finite, unlike the dollar and all these other currencies which can just be easily printed into existence. Bitcoin has a limited supply. The way I look at Bitcoin right now is that it has a 1x downside, meaning all the money you invest in Bitcoin right now could just potentially vanish and go to zero. Unlikely it's just gonna go to zero, but let's assume the worst and it does. But the upside is unimaginably high, because if we imagine the worst was to happen, we get an economic depression and we have to restructure the whole economic system, like so many of these billionaires actually think there's a real chance of happening, that I can promise you whatever new digital currency is going to replace the dollar, whether it's Libra or whatever other currency is the standard, I can promise you it's going to cross paths with Bitcoin, and it will have an on and off ramp to it. But if Bitcoin can become the world's reserve currency because we the people wanted it to be the case and we actually started using it, then it's game over. Each Bitcoin is going to be worth multiple millions of dollars, and that is not an exaggeration. And that's the kind of insurance policy that I want to own. But this is happening, and it's simple economics at play. Regardless of which of these investments you decide to go with, I think there's something to be said about sitting and waiting it out and just putting your money into something safer like bonds or even gold, just so that you can protect your purchasing power and take less risk. In fact, there is nothing wrong with keeping that stimulus check or whatever other money you have as cash and prioritizing other things like building an emergency fund or whatever else, especially if you're nearing retirement. You might want to avoid the risk altogether and not invest in any of these assets. Now, I jokingly said things like loan bubbles, index bubbles, corporate credit bubble, public pension plans not being safe, just to cover all my bases in case one of them happens. I sound really smart like I predicted it, but these are all serious possible realities. Now, unfortunately, all of these potential bubbles are interconnected into the economy. And if we get one of them to set off, then it could potentially lead to a disastrous chain of events like a domino effect that could cause us to go not only into a recession, but a greater depression. In fact, if we overlay the Great Depression of the 1920s and compare that to the graph of 2020, we can see just how close the two look. It's scary, except it took our 2020 graph a lot shorter of a time frame to get to this point. And that suggests that we could have a lot further down to go. So now that I've hopefully sufficiently scared you, and now you know where we're at and that no one has any clue what's going on, if you can make decisions with a long-term intent rather than short-term, and if you can be patient and master yourself emotionally speaking, then I think we'll all do very well. So at least for now and into the distant future, I'm gonna keep my money in my stock portfolio just like I'm doing right now, knowing full well that I could drop below 6 figures. In fact, my portfolio could drop by as much as 80% and go down to the mid $30,000 range, and I could very well lose almost all of my dividend income and lose 100% of my passive income investments as corporations struggle to make ends meet and cut all of their dividends. But I think if that was to happen, the stock market and money in general would be the least of our concerns as we slowly descend into chaos and all just become Bear Grylls and start to drink our own fluids. So I don't think that will happen. But you know what? There's something comforting about knowing that we're not alone in this. You and I are in this together, and I think once we get through this, the financial lessons that we will learn are all gonna make our lives better. And this is true not only on a personal level where we get to learn how to save and invest money and how to be frugal and how to not live paycheck to paycheck, but also for governments to know how to properly exercise good fiscal policy and hopefully encourage and incentivize corporations to bring back the jobs that we have here in the US and incentivize us to create so that we're not dependent on other countries' resources. Corporations should finally take a cue that it's not just people who shouldn't live paycheck to paycheck, but it's also companies as well. Because efficiency actually has its costs, so let's work on being self-sufficient instead, and this also includes myself. And if you haven't already, create your free account with WeBull, fund it $100, get your 2 free stocks, one of which can be valued up to $1,400, sign up to Robinhood, get your other free stock, get all the free money you can get. Stay safe, stay busy, ignore the noise, keep learning, and we'll be just fine. Follow me on Instagram. Love you. Thank you so much for watching. Enjoy the rest of your weekend. See you Monday and Friday. Bye-bye.
And what time frame can we expect for this to happen?
Great question, Jim. Our analysis model predicts that it'll be anywhere between the near to mid distant future.